Man, life's a beach. What's going on, everyone? We have another filing to talk about. This one is a little bit more relevant than the last one. We have SR-Phlx-2021-45. This is a filing out of the NASDAQ. It's a notice of filing and immediate effectiveness of proposed rule change to amend PHLX rules at options 8, section 34. So the purpose of this one, they propose to amend the rules at options 8, section 34, which is flex, index, equity, and currency options. Today, PHLX permits members and member organizations to transact Flex options on its trading floor. Flex options provides investors with the ability to customize basic option features, including expiration date, exercise style, and certain exercise prices. Flex options may be flex index, equity, or currency options. The exchange proposes to amend the expiration term for flex index and equity options to remain competitive with other options exchanges as described below in greater detail. Currently, the expiration date for a flex index option is any month, business day, and year within 5 years. The expiration date for flex equity and currency options is any month, business day, and year within 3 years. Further, with respect to flex equity options, a member or member organization may request a longer term up to a maximum of 5 years, and upon the assessment of the regulatory staff that sufficient liquidity exists among flex equity participants, such a request may be granted. Regulatory staff are exchange employees responsible for, among other things, assessing that sufficient liquidity exists among flex equity participants, requesting a term exceeding 3 years to a maximum of 5 years. The exchange also may designate, according to Supernote 4, other qualified exchange employees to assist the regulatory staffs as the need arises. So the changes. The exchange proposes to increase the maximum term for flex index and equity options to 15 years, similar to SIBO, NYSE ARCA, NYSE American, and NYSE American. So today, SIBO, NYSE ARCA, and NYSE American permit a maximum term of 15 years for flex equity and index options. And Supernote 5 says to refer to the SEC release number 58890, which references a filing from 2008. Interesting. Basically, the expiration date for flex currency options will remain within 3 years. The amendment is proposed for the reasons below. First, the proposal is intended to simplify the process and permit PHLX members and member organizations to transact flex index and equity options with the same expiration terms as SIBO, NYSE ARCA, and NYSE American members. This amendment would permit all flex equity and index options to have the same maximum 15-year term as other option markets that offer flex. Second, this is the one that jacks McTeeths. Expanding the maximum expiration term to 15 years uniformly for flex index and equity options will permit transactions which currently trade over the counter to be conducted within an exchange environment. That is huge. PHLX believes that expanding the eligible term for flex equity and index options as proposed is important and necessary to the exchange's efforts to create products and markets that provide member organizations and investors interested in flex type options with an improved but comparable alternative to the OTC market in customized options, which can take on contract characteristics similar to flex options but are not subject to the same maximum term restriction. By expanding the eligible term for flex index and equity options, market participants will now have greater flexibility in determining whether to execute their customized options in an exchange environment or in the OTC market, similar to SIBO, NYSE ARCA, and NYSE American. The exchange believes market participants benefit from being able to trade these customized options in an exchange environment in several ways, including but not limiting to the following: enhanced efficiency in initiating and closing out positions, increased market transparency, and heightened counterparty creditworthiness due to the role of the options clearing corporation as issuer and guarantor of flex options. Now, counterparty is just like saying the opposite end of a transaction. So if I bought a share from you, you would be my counterparty. So continuing on, the third reason they give to make these changes is that the exchange believes the proposed rule change would allow investors to use longer expiration flex equity and index options to hedge longer-term issuances of structured products linked to returns of an individual stock. Specifically, the proposal will allow institutions to use longer-term flex index options to protect portfolios from long-term market moves with a known and limited cost. The proposal will better serve the long-term hedging needs of institutional investors and provide those investors with an alternative to hedging their portfolios with off-exchange customized options and warrants. So they're saying instead of customizing your options or warrants off exchange, we're going to adjust these rules to give you a alternative in doing it on the exchange, and that which would better help close out your positions. Fourth, the exchange basically is going to eliminate rule text that describes regulatory staff's discretionary authority to extend the maximum term of flex options that expire within 3 years after performing the liquidity assessment. Basically, they're doing this to ensure that options transactions are exposed in such a way as to permit other members an opportunity to participate in price discovery by requiring floor members to seek liquidity in an open outcry. Now, an open outcry is something that happens on a trading floor. So specifically talking about that. Basically, once the flex order is then executed in open outcry, the flex trade is disseminated to OPRA by the exchange. And requesting members may indicate an intention to cross at that time, permitting the participation with all other flex participating members in attempting to improve or match the BBO during the BBO improvement interval, which is the best bid and offer. Lastly, similar to SIBO, the proposed rule change incorporates the concept that the expiration date is the date on which an executed flex option is submitted to the system, which on PHLX is the date the flex option is reported to OPRA and disseminated as an administrative message through the system. Now, the system that they're referring to shall mean the automated system for order execution and trade reporting owned and operated by the exchange, which comprises 1, an order execution service that enables members to automatically execute transactions in option series and provides members with sufficient monitoring and updating capability to participate in an automated execution environment. 2, a trade reporting service that submits locked-in trades for clearing to a registered clearing agency for clearance and settlement, transmits last sale reports of transactions automatically to the Options Price Reporting Authority, or OPRA, for dissemination to the public and industry, and provides participants with monitoring and risk management capabilities to facilitate participation in a locked-in trading environment. And lastly, the data feeds described at Options 3, Section 23. A flex option series is available for trading only when exposed in open outcry and after completion of the RFQ process. Thereafter, exchange staff manually submits the executed flex option to the system, through which it promptly reported to OPRA and disseminated as an administrative message. For the purposes of the definition of the system pursuant to PHLX rules, the date of submission to the PHLX system is the date on which the executed flex option is reported to OPRA. Implementation, no later than September 30th, 2021, of course. They're going to issue an options trader alert to participants to provide notification of the implementation date. So it could come anytime before September 30th. In essence, again, implemented no later than September 1st. 6 key points. Number 1, permits PHLX members to transact flex index and equity options with the same expirations as SIBO, NYSE ARCA, and NYSE America, which is 15 years. Now they're expanding it to 15 years uniformly, and they think that will permit transactions that currently trade over the counter to be conducted within an exchange environment, allowing it for enhanced efficiency in closing out positions. We all know the derivatives market is completely screwed. Number 4, enhanced efficiency in initiating and closing out positions again. Number 5, increased market transparency. We'll see. Number 6, heightened counterparty creditworthiness due to the role of OTC as issuer and guarantor of flex options. That's basically it for this one. Interesting to see about the OTC alternative for options. That's a good sign. We'll have to see if it's used because, again, it's optional. So hang in there. Hope we have a good rest of the day. I'll take it easy.